Let's talk about FXFellow leverage, because this is one of the most important concepts to understand before you start trading. Leverage lets you control a much bigger position with a relatively small amount of capital, which sounds great on paper. But here's the catch. It can boost your profits, and it can just as easily boost your losses, sometimes just as fast. If you're a beginner, the smartest move is to learn how leverage actually works on a demo account first, before you risk any real money. So here's how it breaks down across different asset classes. On Forex, FXFellow offers leverage up to 1 to 1,000. That's the maximum available, and it's one of the highest ratios you'll find anywhere, which makes Forex particularly attractive, but also particularly risky if you're not careful with position sizing. For shares, it's a different story. Leverage caps out at 1 to 20, since individual stocks carry their own risk profiles and tend to move differently than currency pairs. And for indices and futures, the max leverage sits at 1 to 100. Keep in mind, these are just a few examples. FXFellow offers leverage across a much wider range of assets, so it's worth checking the specifics for whatever you plan to trade. One more important thing to know, leverage on FXFellow is dynamic. The more capital you have sitting in your account, the lower your available leverage becomes. This is a built-in way to manage risk as your position sizes grow, so don't be surprised if the leverage changes as your balance changes. Right now, I'm trading on FXFellow's own platform and everything's running smoothly. If you want to check the leverage on any asset, just click on it. The details show up right there instantly. That way, you always know exactly what you're working with before you place a trade.